Hello traders and welcome to another video review. Today is Friday 14th of May 2021. Let's take a look at the Forex calendar to see what is going on the last day of trading. During the London session we don't have too many data scheduled for release, but 12:30 we got ECB monetary policy meeting accounts, and that's about it. During the New York session, of course, we have data from Canada and from US only. 1:30 there are manufacturing shipments and wholesale sales, but the key event of today is retail sales data from the US scheduled for release 1:30. Together with this release we got import price index, capacity utilization and industrial production and manufacturing production data. Later in the day we got Michigan consumer sentiment index scheduled for release at 3 o'clock and University of Michigan inflation expectations together with the business inventors. For all of you crude oil traders, there's a bucket huge US rig count scheduled for release at 6 o'clock. So that's about it. Not too many important data are scheduled for release for today, so let's just go straight to the charts. Okay, this is the US dollar index on the daily time frame chart. As you can see here, we got this chart covered before. We got A, B, C. Let me just zoom out. ABC move to the upside, and then big wave to the downside. Wave A, bouncing the wave B, and of course we are continuing the wave C right now. The projected low for the wave C is at the beginning of the wave A from the 6th of the January 2021. So this is the level of 89.15. We already got the bounce we got the low at the level of 89.95. We got the bounce towards the technical resistance at 19.92, and now after the doji candlestick was made here and here. Of course, as you can see, those are the candlestick patterns of possible trend reversal, and we got this red of course candle here approaching the lows of the 89. So this is the level here. Let me just put my horizontal ray on the level of 89.97, which is the low of the 11th of the May. So right now our downside scenario is of course being continued, and everything looks like it's in line with the expectations. So if the US dollar is going down, American dollar index, now we are going to the euro dollar. Euro dollar is, as you can see, just below the key technical resistance. Recent high was made somewhere here at the level of 1.2180. We got, of course, the rejection. The price didn't come back to the channel, was rejected at 1.2220 almost, because the high was 1.2182, so that's 18 pips before the key short-term technical resistance. So far we didn't even hit it, but we still have the rejection. So the price is right now trading in a consolidation between 1.1993 1.2182, right? So this is the consolidation, and we are waiting for the breakout. This breakout will be very important. Why? Because if we break below the support, okay, so the market will reverse, will break under the 1.1993. That means we are most likely going lower, and that was the wave X, and we are continuing with the corrective decline. And then of course our targets are 1.1952, 1.1831, 1.1703 as the low of the wave 3. However, in case of a breakout to the upside, the key technical resistance is violated, so the bullish wave A, B and C to the upside might be continued towards 1.2246, and of course the recent high 1.2352. So please keep an eye on this current developments, because we are still in the positive territory, still above 50 points on the RSI market. So there is anything can happen here, and including the up move towards 1.22 and a breakout. US dollar Swiss franc, Let's take a look at this pair. As you can see, daily time frame, again we are kind of a low on the RSI, so the market is being controlled by the bears. If we zoom in, we can see that we got a big sell-off wave. We got this short-term trend line that has not been violated yet. However, this key demand zone had been already broken, but not that much. We have a nice bounce, but again bearish engulfing here around the short-term trend line resistance, and just slightly above the 9,079 pips technical resistance, of course, rejection, and now we are back to this zone. If we break the key demand zone, 8,998, 9,045 pips, the next target is 8,919 pips on the US dollar to the Swiss franc. So please keep an eye on this one as well. And last but not least, let's just take a look at Bitcoin. Why Bitcoin? Because it looks like we have a major top done recently. Why I do think like this? Because it looks like the wave B, despite the fact that might be completed here, there is nothing wrong to put it here, and the wave C to put it here. And the key technical support had been violated, $50,000. So now the key target for market is at the level of 43,000 or 42,000, somewhere between these two levels. As you can see, if the market will hit this level, that would mean we got 33% of correction, which is the biggest correction in the whole cycle up since the March 2020, and that means this cycle will be a part of a new trend down, temporary trend down, of course, and not a part of the previous cycle up. So something else is being done here, and right now it looks like we have unfinished wave C to the downside. Of course, we have to wait for the momentum to go a little bit lower towards 30 points, but as you can see, it's still below 50. So bears are in control of a Bitcoin. Of course, it affects the other cryptocurrencies. It affects the Ethereum. It affects the Litecoin, XRP, and so on. So please keep an eye on the Bitcoin, because it looks like it's very unstable and very news related cryptocurrency right now, and this prices looks very expensive for a Bitcoin. Even $50,000 is right now a kind of a expensive price. Please remember the all-time high is 64,768, which is as well the high of the whole rally, because the all-time high was made during this rally up since March 2020. So if this is wave 3, if this is wave 4, if that's wave 5 we've been counting on, this is 1, 2, 3, 4 and 5. So it looks like this might be beginning of the corrective decline in a Bitcoin. And believe me, there is a space, there is a room for decline, for corrective decline to the downside, of course. Please notice that if we break below 41,893, the next target is around $30,000, which means the corrective decline will be more than 50% if the price will get here. But right now, we are just waiting for the market to hit 41,893 in order to complete the corrective cycle in the wave C. So that's everything for me for today. Thank you very much for watching, and I hope I see you guys next time. Bye bye.